Hello, everybody, and thanks for joining tonight as we're going to dive into some Social Security to discuss some strategies along with it, as well as when you should start receiving your retirement benefits. Before we get started tonight, there are a couple disclosures that we need to go through just to start off the bat. I am a licensed investment advisor within the state of Michigan, and I am licensed to sell insurance, annuities, and securities. I am licensed through Sigma Financial. Uh, I am based out of Jackson, Michigan, and this is not intended to be any type of sales seminar or anything like that. It's really just to provide you with general information on Social Security. There will be an opportunity to schedule an appointment with me if you do want one-on-one consultation, if you want to look at your situation specifically, or to get recommendations based on these specific products or services that might benefit you. But there is no obligation to actually do that by attending this webinar. So many people think that claiming Social Security is a one-size-fits-all approach. But as you approach retirement, when to claim your Social Security retirement benefit is one of the biggest financial decisions you can make. Should you begin receiving benefits at your full retirement age, which is anywhere from 66 to 67, depending on your year of birth? Should you begin receiving smaller monthly benefit before your full retirement age as early as 62? Or should you wait past full retirement age to receive a larger monthly benefit? You can delay receiving benefits up to age 70. As important as your decision is, there is no one size fits all answer. It's a personal decision that must be made based on your unique circumstances. Of course, sometimes the answer is simple. You may have to claim Social Security benefits as early as possible if you need Social Security income right away to meet day to day living expenses, perhaps because of illness, disability, or possibly unemployment. But if that's not the case, if you have other sources of retirement income, or you want to continue working, for example, you want to take the time to make an informed, well-reasoned decision about your Social Security benefits. If you're like most people, you've paid in Social Security for years and you'd like to get the most out of what it can do. So to start, here are two major reasons why when you claim Social Security is so important. First, when you claim benefits can significantly affect your overall retirement income. With pensions disappearing, Social Security remains the major source of guaranteed lifetime retirement income for most Americans. Once you apply, your retirement benefit will be locked in for the remainder of your life. In most circumstances, not accounting for annual inflation adjustments or recalculations to account for additional work. So, taking time to explore your options now can help you make sure you have enough retirement income later. Keep in mind the timing of benefits can also affect your spouse because he or she may be entitled to receive spousal retirement benefits and survivor benefits based on the amount you receive. So there's a lot to consider when you make this decision. Here are some of the factors that this presentation will discuss. Your full retirement age and how your benefit is calculated. The amount of your future retirement benefit and the effect of taking benefits early or late. How many years you expect to spend in retirement based on life expectancy, whether you plan to continue working, your other retirement income sources, your income tax picture, and how your decision will affect your spouse and the benefits he or she can receive. So, starting with two basic things you need to know as you begin to explore your options. First, what is your full retirement age? It's the age at which you receive a full or unreduced Social Security retirement benefit. Full retirement ages range from 66 and 2 months to 67, depending on the year you were born, as shown on the chart. If you begin receiving benefits earlier than this age, you'll actually get a reduced benefit. If you begin receiving benefits after this age, you'll receive a higher benefit because you'll earn delayed retirement credits. Other benefits that you or your family members can receive are also based on what you're eligible to receive at your full retirement age. The second thing you'll want to consider is how your full retirement benefit is calculated. The benefit calculation is complicated and beyond the scope of what we can talk about today, but here's a brief overview. Your Social Security retirement benefit is based on the number of years you've been working and your earnings over those years. To qualify for Social Security retirement benefits, you must have worked at least 10 years in Social Security covered employment. When you become eligible for benefits at 62, the Social Security Administration calculates your full retirement benefit. Your highest 30 years of earnings are indexed to adjust for inflation, then they are averaged. Finally, a formula is applied to determine what's called your full retirement benefit. You may also hear your full retirement benefit referred to as your basic benefit or primary insurance amount. If you retire at full retirement age, you will receive 100% of this amount. But if you begin receiving your retirement benefit earlier, your benefit will be reduced by a certain percentage for each month that you receive benefits early. So, taking a closer look at how much you'll receive if you want to start receiving benefits earlier than your full retirement age. Currently, the earliest retirement age in which you can receive Social Security benefits is 62, but choosing to claim benefits early has consequences because it will permanently reduce the amount you receive. Your benefit is reduced by a certain percentage for each month you receive benefits early. The percentage will depend on your full retirement age. So here's an example. Let's say your full retirement age is 67 and you decide to apply for benefits at 62. Your benefit will be 30% less than it would be at 67. As the chart shows, a $2,000 monthly benefit taken at age 67 will be reduced by 30% to $1,400 if taken at age 62. However, you'll receive benefits for a longer period of time than if you began receiving benefits at your full retirement age, and that is certainly a big factor. This will be discussed later on, but first let's look at see how your benefit will be affected if you decide to delay retirement instead. If you delay receiving Social Security benefits, you'll receive delayed retirement credits that will permanently increase your benefit. Your benefit will increase for each month you delay receiving benefits, or 8% per year, past your full retirement age, or that will go up until age 70. Note that we're only talking about benefits based on your own earnings record. You won't receive delayed retirement credits for survivor benefits or spousal benefits. So to continue with the hypothetical example from the previous slide, if your full retirement age is 67 and you decide to delay receiving benefits until age 70, your benefit at age 70 will be 24% more than at age 67. So as the chart shows, a $2,000 monthly benefit taken at age 67 will be worth $2,480 if taken at age 70 instead of 67. And this final chart shows the range of monthly benefits you might receive depending on when you choose to begin receiving benefits. So in the hypothetical example, if $2,000 is the full retirement benefit at age 67, the monthly benefit of $2,480 at age 70 is approximately 77% more than the monthly benefit of $1,400 taken at age 62. A big increase. However, what this chart doesn't show is that you receive benefits for 8 years longer if you claim them at age 62 rather than age 70, and that can add up to a lot of money. In this example, if you receive $1,400 as a benefit for 8 years, you would have received $134,400 by age 70, not including any cost of living adjustments. So we return to the question, is it better to opt for a smaller monthly benefit at age 62, but receive it for a longer period of time? Or is it better to claim at age 70 to receive the highest monthly benefit possible? Again, there's no one size fits all answer. In part, it depends on how long you can afford to delay receiving benefits and how long you expect retirement to last. Which raises the question, how long will retirement last? There's no way for us to know for sure, but retirement may last longer than you think. According to the Social Security Administration, about 1 in 3 65-year-olds today will live until at least 90, with 1 in 7 living until at least 95. You may even want to plan for this maximum lifespan to reduce the risk that you'll live longer than you expect and simply run out of money. For example, if you wait a few years to claim benefits, you'll receive a higher monthly benefit for life. And because you'll receive annual cost of living adjustments if prices rise, your benefit generally will keep pace with inflation, unlike most other guaranteed income sources. If you're married, you'll need to consider the joint life expectancies of you and your spouse, which will often differ from your individual life expectancies. If you're thinking about working well into your 60s and 70s to increase your retirement savings, you may be wondering whether you can receive Social Security benefits while continuing to work. The answer is yes. Many people choose to apply for Social Security benefits before they actually retire. But as you may have heard, earnings from work may affect your Social Security benefit if you're under the full retirement age. If you're under full retirement age and your earnings exceed a certain amount called the annual earnings limit, part of your benefits will be withheld, reducing the amount you receive from Social Security. But once you reach full retirement age, you can work and collect full Social Security benefits. Earnings from a job will not affect your benefit at all. If you're under full retirement age, the rule is that $1 in benefits will be withheld for every $2 you earn over the annual earnings limit. This limit generally changes every year, but in 2025, the limit is 23,400. In the year you reach full retirement age, a special rule applies. $1 in benefits will be withheld for every $3 you earn over the annual earnings limit. In 2025, the limit is $62,160. As mentioned earlier, at or full at or after full retirement age, earnings will not affect your benefit. To clear up a common misconception, you're not actually losing benefits because you choose to work, so you don't need to try to limit your earnings. If some of your benefits are withheld, you receive a higher monthly benefit at full retirement age because the Social Security Administration will recalculate your benefit every year and give you credit for any of those earnings that are withheld. So, the effect working will have on your benefits is only temporary, and any additional earnings you have may actually increase your benefit later. The Social Security Administration has a tool called the Retirement Earnings Test Calculator that you can use to see how earnings before retirement age might affect your benefit. One of the most important factors to consider as you decide when to begin receiving Social Security benefits is how your decision will affect your overall retirement income plan. Most people have several sources of retirement income, including Social Security, income from savings, investments, earnings from a job, and pension benefits. How much retirement income do you need, and how does Social Security fit into that plan? If you have less than adequate retirement savings or no pension, you may need to rely more heavily on your Social Security income, leading you to claim benefits early if you need retirement income as soon as possible. Or conversely, encouraging you to postpone claiming benefits so that you can earn the highest benefit possible. But if you have been able to accumulate substantial retirement assets, you may have more flexibility when it comes to timing your Social Security benefits. For example, it's possible that claiming your Social Security benefits sooner rather than later will allow you to delay withdrawing from funds from tax advantage investments like 401ks, 403bs, traditional IRAs, allowing them to accumulate tax deferred a bit longer. Alternatively, tapping other retirement assets first may allow you to postpone claiming Social Security benefits thereby allowing you to accrue delayed retirement credits. Taxes may also be a consideration, depending on what income you have in addition to your Social Security benefit. Now, taxes aren't going to be a big concern for everyone, but if you have little or no income other than Social Security, then your Social Security income generally won't be taxable. However, if you have income from other sources besides Social Security, you may end up having to pay federal income taxes on your benefits. As shown on the chart, a portion of your Social Security benefit may be taxable, depending on your combined income from Social Security and other sources in your tax filing status. So, for example, let's say you're single and collect a Social Security benefit of $30,000 per year and have $25,000 in earnings from a job. Up to 85% of your benefit may be taxable because your adjusted gross income plus one half of your Social Security income is greater than $34,000 for $34,000 per year. The important point to remember is that when you're making your decision about when to begin receiving your Social Security benefits, federal and in some cases state income taxes may be a consideration if you have substantial taxable income such as earned income, taxable pension income, or investment income. Now, if you're married, there's another important question you'll need to ask before you decide when to claim benefits. How will my decision affect my spouse? That's because when you begin receiving your retirement benefit, can dramatically affect your spouse's benefit during retirement and thus your overall household income. Your decision can also affect any survivor benefit your spouse may be entitled to, and your spouse has decisions to make too. Together, you'll need to consider what the most appropriate combination of claiming ages is based on your ages, earnings, and life expectancies. Other people, such as your dependent children or former spouse, may also be eligible for benefits based on your earnings record, but the rules are a bit different and they're not covered in this presentation. When you're married and both you and your spouse have worked in jobs covered by Social Security, each of you may be entitled to retirement benefits based on your own earnings record. As you recall, at your full retirement age, you're entitled to receive 100% of your full retirement benefit and can receive reduced benefits as early as age 62. You or your spouse may also be entitled to spousal benefits. For example, if your spouse has had low lifetime earnings, he or she may be entitled to a spousal benefit based on your earnings record that is larger than a retirement benefit based on his or her own earnings record. At your spouse's full retirement age, the spousal benefit will generally equal 50% of your full retirement benefit. However, that amount will be reduced if your spouse files early. For example, if your spouse's full retirement age is 67 and he or she files at age 62, your spouse will receive only 35% of your full retirement benefit amount. This reduction is permanent, so it's important to carefully consider the implications of filing early. And keep in mind that your spouse can't collect spousal benefits until you have filed for your retirement benefit. In addition to retirement benefits and spousal benefits, married couples must consider survivor benefits. When you claim your Social Security benefit can greatly affect the amount of income available to your spouse should you pass away, because your surviving spouse will generally receive the benefit that you were receiving at the time of your death, unless your spouse is already receiving a higher benefit based on their own earnings record. If your spouse's life expectancy is much longer than yours, this can be an especially important consideration. Survivor benefits may be payable as early as age 60. However, a benefit reduction will apply if the surviving spouse begins collecting a surviving benefit between age 60 and his or her full retirement age. So here's a hypothetical example that illustrates why it's important for spouses to carefully choose when to begin receiving Social Security benefits. In this example, both spouses are able to claim benefits based on their own records. Spousal benefits are not considered here. As this table shows, if both spouses choose to claim benefits at age 62, their joint monthly income will be $3,077. But if both spouses wait until age 70, their joint monthly income will increase to 5,451, a difference of $2,374 per month, which equates to over $28,000 per year. In addition, by waiting longer to claim retirement benefits, spouse one may also substantially increase spouse two's monthly surviving benefit. Since Social Security generally pays the surviving spouse the larger of his or her own retirement benefit or the benefits his or her spouse had been receiving. Of course, this illustration does not account for other factors that this hypothetical couple might need to consider, and your own situation and overall income plan will be unique. One strategy some people might consider in certain situations is a do-over or reset. This might be appropriate if you filed for early Social Security benefits before reaching full retirement age and regret taking a permanently reduced benefit. It also has the potential to benefit your surviving spouse, who might be eligible to claim a survivor benefit based on a higher amount. You are allowed to take this action only once in your lifetime, and the application to withdraw benefits must occur within 12 months of the time you made your original claim for retirement benefits. Moreover, you must repay all the Social Security benefits you and your family have received up to that point. Fortunately, you won't have to pay any interest. To reset your benefit, you need to fill out and file Social Security Form 521, request for withdrawal of application, noting the reason why you want to withdraw the application to benefits on the form. The Social Security Administration will respond to your request and notify you of the amount of benefits that need to be repaid. Then you only have 60 days to cancel an approved withdrawal. Once this process has been approved and completed, you will be able to reapply for Social Security benefits at a future date. If you wait until full retirement age to apply, you would receive your full benefit amount. And if you wait until age 70, you could receive your maximum benefit. So this presentation has explored some of the major questions that you'll want to consider as you decide when to begin receiving Social Security benefits. To recap, here are some of the reasons you may decide to claim benefits earlier, as well as some of the reasons you might want to claim benefits later. Remember, the choice is really yours. It's up to you based on your unique needs and circumstances. Retirement can be exciting, but it also comes with financial challenges. When you're ready to make decisions about your Social Security benefits, take the time to explore your options. As a starting point, if you haven't already done so, I urge you to go to the Social Security website, where you have a couple of relatively easy ways to estimate what retirement benefits you might receive. First, you can sign up to access your Social Security statement online so that you can view a summary of your actual earnings record and an estimate of your retirement benefits based on up to 9 different claiming strategies, including age 62, full retirement age, and 70. If you're already age 60, you also have the option of receiving the statement in the mail every year, about 3 months before your birthday. The second way to estimate your Social Security benefit is to use the Social Security Administration's retirement estimator, which is also available at that website. This calculator allows you to input various scenarios based on current law to estimate your future benefits. And as you near age 62, you should also contact the Social Security Administration to discuss your options. Representatives are not allowed to give you advice about when to start benefits. They will be happy to explain your options and the rules that do apply. When it comes to time to apply for Social Security benefits, you can do that online, by phone, or in person. Small steps can really enhance your financial life one day at a time. Questions are always welcome. Please drop those in the Q&A off to the side. And if you have any other questions or concerns regarding your Social Security, please feel free to get a hold of me. My contact information is available via email that you will receive following this presentation. And just to finish us up, just a few more disclosures that we have to always make sure we add to the end. Thank you, everyone, for coming. I appreciate your time, and I hope to hear from you soon. Thank you, and have a great day.